Hey everyone, welcome back for another deep dive. Today we're tackling a topic that I know a lot of you are curious about, artificial intelligence in finance.
It's definitely a hot topic.
Yeah, and you sent us this U.S. Treasury report, Artificial Intelligence in Financial Services. And I gotta say, it's pretty eye-opening. This isn't just like robots taking over Wall Street stuff. It's about AI that's already affecting your money, like right now.
Yeah. It's amazing how pervasive it is already. And the report, highlights this shift that's underway from, they call it traditional AI to these more cutting edge forms of AI, especially generative AI.
Okay, so hold on, let's back up for a second. When we say like traditional AI, what exactly are we talking about?
Sure. So think of it like algorithms, analyzing tons of data, looking for patterns, making predictions.
Right, like, when Netflix suggests what you should watch next.
Exactly. That's a great example. Or think about fraud detection. Oh, yeah, that reminds me. Actually, you sent in some notes saying you were interested in how the Treasury itself uses AI to recover taxpayer money, right?
Oh, absolutely.
Yeah.
Yeah, so they're using traditional AI to, like, sniff out fraud patterns and recover funds.
Wow, $1 billion, they said.
$1 billion, yeah. So that's a pretty powerful example right there.
Okay. So it's like I don't know, like a superpower detective combing through mountains of financial data.
Exactly. That's a great way to put it.
But then there's this generative AI. What makes that different?
So generative AI is all about creating new content. Think of those AI image generators.
The ones that like spit out pictures of cats riding unicorns or
Yes,
whatever.
exactly. But instead of images, generative AI can create financial reports, analyses, even investment strategies.
Whoa. So you're telling me I could get a financial report that looks totally legit, but it was actually made by like a computer program.
Right. And the report acknowledges, some of the concerns around this,
Mhm.
especially something called hallucinations.
Hallucinations. Okay, now that sounds a little freaky.
Yeah, well, that's when these generative AI systems confidently present information that's just plain wrong or completely made up.
So it's not even just about the AI being biased, it could just be flat out making stuff up.
Precisely.
Mm.
That's a whole other level of risk. And one of the things I really appreciate about this report is um, it's not just presenting one viewpoint. It's based on 103 comment letters.
103.
103 comment letters from,
Right.
banks, tech companies, consumer groups. You get a real cross-section of the financial landscape in there.
Okay, so we're not just getting like the tech industry's take on this. We're getting like a well-rounded perspective.
Exactly.
And they're saying that AI is being used in like a ton of different ways, right?
Absolutely. Both externally, so, interacting with consumers like you and me,
Right.
and internally within the companies themselves.
Okay, so let's break those down. First, the external stuff. What are some examples of how AI is being used, for everyday banking, investing, that kind of thing?
Well, you mentioned those Netflix recommendations earlier. That personalized approach.
Right.
It's popping up everywhere.
So what, like, my bank is going to start recommending credit cards to me based on, like, my spending habits?
It's already happening.
Yeah.
And think about robo-advisors. Those platforms that use algorithms to give personalized investment advice, often at a much lower cost than a human advisor.
Okay, so AI could actually make financial advice more affordable. That's cool, but, does that mean that, like, human financial advisors are going extinct?
Well, that's a big question.
Yeah.
I think it's more likely that their role will evolve.
Yeah.
The report talks about, the need for consumer education, especially as AI plays a bigger role in our financial decisions.
Yeah, that makes sense because, I mean, you could see people just blindly trusting these algorithms without really understanding what's going on behind the scenes.
Yeah.
What about insurance? I feel like I've been hearing a lot about AI and insurance lately.
Oh, absolutely. AI is having a big impact on insurance. It can analyze these massive data sets to assess risks way more accurately and quickly.
So, like, is that why my car insurance premiums keep going up? Just kidding. But seriously, how does that work?
Well, for example, AI can predict weather events to help price policies or even analyze images of, like, car damage to process claims faster.
Okay, so potentially saving people money and time, that's a good thing. But I know the report also talks about some potential downsides, like the risk of these AI systems perpetuating bias.
Right, and that's a really crucial point. There's this concern that if AI systems are trained on data that reflects, historical inequalities,
Right.
they could unintentionally amplify those biases.
So, like, even if you program the AI to be fair, if the data it's learning from is biased, you're going to end up with a biased system.
Exactly. So you could imagine like an AI tool for loan approvals that's trained on data that, reflects past discriminatory lending practices.
Ugh. Yeah, that would be bad.
It could end up denying loans to certain groups unfairly, even if nobody explicitly programmed it to do that.
That's pretty disturbing. So it's not enough to just develop the technology. We have to make sure it's actually used ethically.
Exactly.
Okay. So we've talked about how AI is being used externally. What about those internal use cases? How are these financial institutions using AI behind the scenes?
Well, one major area is risk management and compliance.
Okay.
Think of it like this. Imagine an AI system that analyzes thousands of transactions every second, flagging anything that looks even slightly suspicious.
So it's like having an army of virtual detectives constantly on the lookout for fraud.
Precisely.
That's got to be a lot more efficient than the old ways of doing things.
It is. And
Yeah.
AI is also being used to streamline a lot of those back office operations. Things like processing loan applications or handling customer service inquiries.
Right, but doesn't that raise concerns about job displacement? If AI can do all these tasks faster and more efficiently, what happens to the people who currently have those jobs?
That's a valid concern. And the report, acknowledges that. It talks about the potential for AI to both create and displace jobs.
But it's not all doom and gloom.
Right. And it emphasizes the need for retraining and upskilling programs to, help workers adapt.
So equipping people with the skills they need to thrive in this new AI-powered world.
Exactly.
Okay, so it seems like this report is really trying to present, a balanced view, acknowledging the potential of AI, but also addressing the potential risks and challenges.
I think that's a fair assessment. It's a really nuanced discussion.
It is, and it's packed with these interesting little details. Like, it mentioned that the way we regulate AI might need to, fundamentally change to keep up with how quickly it's evolving.
Oh, absolutely. Yeah, the current regulations, they were designed for a different era. They weren't really built with AI in mind.
Right, so, the rules of the game have changed, but the rule book hasn't caught up yet.
That's a great analogy. And the report suggests that regulators might need to, rethink their approach.
Yeah, because it's not just about using AI responsibly, it's also about making sure that our laws and regulations are actually equipped to deal with this new technology.
Exactly.
This is definitely giving me a lot to think about. Before we move on, are there any other points from this first part of the report that really jumped out at you?
One that I found particularly interesting was the whole discussion around data.
Okay.
It's pretty obvious that high quality data is, it's crucial for training these AI systems. But the report also raises these concerns about, data privacy, security breaches, and even the possibility of someone intentionally manipulating data to poison these AI models.
Data poisoning, that sounds pretty intense.
It is. Imagine someone deliberately feeding an AI system false information.
Whoa, why would they do that?
Well, to manipulate its decisions, of course, for their own benefit.
So, someone could intentionally mess with the data that's used to train a loan approval AI and cause it to, make unfair decisions.
Exactly.
That's a scary thought.
It is. The report stresses that protecting the integrity of that data is, it's absolutely essential, especially in finance.
Yeah, I mean, we're talking about people's money here. I can't just let anyone mess around with that.
All right. The stakes are high.
It seems like the more we dig into this, the more complex it gets.
Oh, absolutely.
Yeah.
AI in finance presents these enormous opportunities, but also, significant risks.
Yeah, like two sides of the same coin.
Exactly.
Yeah.
And that's why, I think this deep dive is so important. We need to understand both sides to make informed decisions about how this all plays out.
Well, I think we've given our listeners plenty to chew on already, and we're just getting started. There's still so much more to unpack.
There is, specific risks, how to mitigate them, the potential impact on consumers.
Right, all that good stuff. So stay tuned for part 2 of this deep dive, where we'll continue exploring this fascinating world of AI in financial services. Welcome back to our deep dive on AI in financial services. In part 1, we talked about how AI is already being used, the potential benefits, the risks. But one thing that really stuck with me was this whole idea of AI's impact on consumers, for better or worse.
Absolutely. And that's a major theme throughout this report. It talks about, for example, how AI could help promote financial inclusion.
Mm.
making sure everyone has access to financial services,
Mhm.
regardless of their background or income level.
Yeah, you mentioned that AI could help people who might not have like a traditional credit history get access to loans or other products. I'm still a little fuzzy on how that would actually work.
Sure. So traditional credit scoring systems, they basically just look at your credit card payments, your loan history, that kind of thing.
Yeah.
But AI can analyze a much wider range of data.
Okay.
Like it could look at things like your rent payments, your utility bills, even your educational background.
Oh, interesting.
So it paints a more complete picture of your overall financial situation.
So it's like instead of just looking at your past, it can actually predict your future financial behavior.
In a way, yes. And that could make it easier for lenders to assess your credit worthiness,
Yeah.
even if you don't have a thick credit file.
So AI could actually level the playing field and
Yeah.
make financial services more accessible to people who have been traditionally excluded.
Potentially, yes. But the report is also careful to say that this needs to be done, very carefully.
What do you mean?
Well, we need to make sure these AI systems are fair and unbiased. For example, if the data used to train them contains historical biases, reflecting past discrimination,
Right.
the AI could end up perpetuating those biases.
Even if it wasn't programmed to be discriminatory.
Exactly. It's like the AI might not even know it's being biased, but it's learned those patterns from the data it was trained on.
So how do we prevent that? How do we make sure that AI is actually used to promote fairness and not reinforce existing inequalities?
Well, one solution could be to require more transparency in how these AI systems make decisions. Imagine a world where, if you're denied a loan, you could actually see what factors the AI considered.
Oh, interesting. So like instead of just getting a yes or no, you'd get an explanation.
Right, and that would allow for more accountability. You could see if there were any, red flags in the data or any signs of potential bias.
Yeah, that makes a lot of sense. Transparency seems key to building trust in these systems. And speaking of trust, another thing that comes to mind is data privacy. With all this personal data being analyzed by AI, how can we be sure that data is being used responsibly and protected from, breaches?
The report highlights the need for strong data protection measures, especially as the use of AI in finance expands. It even suggests that maybe we need to move beyond those, traditional notice and consent models for data sharing.
Those long, complicated terms of service that nobody actually reads. Exactly, because often you're agreeing to things without really understanding how your data might be used. The report argues that consumers should have more control over their data, more transparency into how it's being used.
So, giving people more say in how their data is used, not just by companies, but by these AI systems as well.
Right. And holding companies accountable for how they collect, store, and use consumer data for AI.
Earlier, you mentioned this trend of financial institutions relying more and more on like third-party AI providers. Can you elaborate on that a bit?
Sure. So many financial institutions, they don't have the in-house expertise to build their own AI systems.
Right.
So they're turning to these specialized companies that offer AI solutions as a service,
Okay.
which can be great. It gives them access to cutting-edge technology,
Yeah.
but it also introduces new risks that they need to be aware of.
Like what?
Well, one obvious concern is data security. If you're sharing your sensitive financial data with another company, you need to be absolutely sure they have the proper safeguards in place to protect that data from breaches and hackers and all that.
So it's not enough to just trust that any company offering AI services is like automatically trustworthy.
Right. Financial institutions need to do their due diligence, carefully vet these providers, and understand their security practices, their data handling procedures, all that.
What about the AI systems themselves? How can these companies be sure that they understand how these systems work and the potential risks involved?
That's another really important point. There's a risk of what's called vendor lock-in.
Vendor lock-in.
It's when a company becomes so reliant on one particular provider that it's like really hard to switch to a different one, even if they wanted to.
Even if the system wasn't working well or they had concerns about, security or bias.
Exactly. They're kind of stuck. And that's why the report emphasizes the importance of, maintaining some level of in-house expertise. Even if you're using third-party tools, you need to understand the basic principles of AI. You need to be able to critically evaluate the systems you're using.
So don't just blindly trust the black box.
Right. Ask questions, understand the limitations, be aware of the potential risks.
Okay, that makes sense. So we've talked about Data privacy and third-party risks. What about the regulatory landscape? All those laws and regulations that govern the financial industry. Are they keeping up with the rapid pace of AI?
That's a big question, and the report spends a lot of time discussing it. The thing is, a lot of our existing laws, like those related to fair lending and consumer protection, they're what's called technology neutral.
Technology neutral.
It means they were written in a way that applies regardless of the specific technology being used.
Okay.
So whether a decision is made by a human loan officer or an AI algorithm, the same rules should apply, in theory.
But does that always work out in practice? I mean, AI is pretty different from a human loan officer, right?
Right. And that's where things get tricky. The report acknowledges that some of these existing regulations might need to be, clarified or updated to address the unique challenges of AI.
Like what? Give me an example.
Well, take algorithmic bias, for example. We talked
Yeah.
about that earlier. There's a risk that AI systems could perpetuate existing biases, even create new ones.
Right.
Some experts argue that we need specific regulations to address that, going beyond just applying our existing anti-discrimination laws.
Because those laws were written for a world without AI.
Exactly. And another area where new regulations might be needed is around explainability. Remember we talked about how some of these AI systems are like black boxes?
Yeah, where you can see the input and the output, but not the decision-making process in between.
Right. And that raises concerns about accountability and fairness. Some people argue that we need regulations that require a certain level of explainability for AI systems, especially when those systems are making decisions that, have a big impact on people's lives.
Like deciding whether or not you get a loan or how much you pay for insurance.
Exactly. Decisions that can have real-world consequences.
So it's about striking that balance, right? Fostering innovation, but also protecting consumers.
Right. It's not about stifling progress. It's about making sure that progress is responsible and benefits everyone.
Well, this has been a really thought-provoking conversation. Before we wrap up this part, is there anything else from this section that you think is really crucial for our listeners to grasp?
One thing that's really important to remember is that the world of AI and finance is constantly changing. What's cutting edge today might be old news tomorrow. The report really stresses the importance of ongoing research, monitoring, adaptation. We need to stay informed, be aware of the latest developments, and be prepared to adjust as the technology evolves.
So it's not like we can just solve these problems once and then, move on. It's an ongoing process.
Absolutely. And one of the ways we can stay ahead of the curve is by really thinking about how malicious actors might try to use AI.
Malicious actors? You mean like cyber criminals?
Exactly. Just as financial institutions are using AI to improve their security, well, criminals are figuring out how to use AI to launch more sophisticated attacks.
Can you give me an example? Like, how could AI be used for cybercrime in finance?
Sure, think about phishing scams.
Those emails that try to trick you into giving up your passwords and stuff?
Yeah, well, imagine an email that looks exactly like it's from your bank,
Okay.
asking you to update your account information. But it's actually a fake, designed to steal your credentials.
Yeah.
AI can be used to make these scams incredibly realistic, very difficult to detect.
Oh, wow. So it's like an arms race then, where the good guys and the bad guys are both using AI.
That's a good way to think about it. And the report emphasizes the importance of investing in robust cybersecurity measures, including AI-powered tools to detect and prevent these kinds of attacks.
So AI is both a weapon and a shield in this cyber battlefield.
Exactly. It's a double-edged sword. And the report talks about using things like, machine learning algorithms to analyze network traffic, to try and identify suspicious patterns that might indicate an attack.
It's like a whole new era of cybersecurity.
It is. And collaboration is key. Financial institutions, tech companies, law enforcement, they all need to be working together, sharing information, best practices to defend against these threats.
Wow, this has been a really intense deep dive into AI in financial services. We've covered so much, the potential benefits, the risks of bias, data breaches, cybercrime. It's a lot.
And we're not done yet. There's still more to come.
But before we move on to the final part, let's take a quick break. When we come back, we'll delve into the report's recommendations for the future and explore what all of this means for you, our listeners. Stay tuned.
All right, we're back for the final part of our deep dive into AI and financial services. So we've talked about how AI is being used, the good, the bad, the regulatory stuff. But where do we go from here? What's the future look like?
Well, the report doesn't just lay out the problems. It actually offers some pretty concrete recommendations for moving forward. And one of the big themes is collaboration.
Collaboration, okay. But between who?
Well, everybody, really. Government agencies, regulators, the financial industry, tech companies, consumer groups, researchers, everyone needs to be at the table.
And what would that look like? I mean, what would they actually be doing together?
Well, for one, the report suggests developing consistent standards for AI governance.
Hmm. Because right now, there's a lot of variation in how different companies are approaching AI risk management. So having these clear industry-wide standards would help make sure that AI is being developed and deployed responsibly.
So it's like we need a shared set of rules of the road for AI in finance.
That's a great way to put it, yeah. And another area for collaboration is information sharing.
Okay.
Different players in this ecosystem are, they're gaining valuable insights into AI risks, best practices. Sharing that knowledge more widely could really help everyone stay ahead of the curve, and mitigate potential harms.
Yeah, it's like instead of everyone trying to figure this out on their own, we can learn from each other's successes and failures.
Exactly. And the report also really emphasizes the importance of, finding that balance between fostering innovation and protecting consumers.
Right, because it's not about stopping progress, it's about making sure that progress is beneficial.
Exactly.
We've been focusing a lot on the US, but AI is obviously a global thing.
Right. And the report does acknowledge the need for international cooperation. Different countries are developing their own approaches to AI regulation, and it's really important to make sure that those approaches are aligned, as much as possible.
Yeah, because otherwise you could end up with this like patchwork of conflicting regulations, which would be a mess for businesses and probably stifle innovation, right?
Absolutely. Harmonizing those regulatory frameworks internationally could help promote a level playing field and encourage responsible AI development globally.
Okay, so we've talked about collaboration between governments, regulators, industry, but what about the individual financial institutions themselves? What's their role in all of this?
Well, the report really stresses the importance of internal governance and risk management. It recommends that financial institutions establish clear policies and procedures for, AI development deployment. That means conducting thorough risk assessments, having robust monitoring mechanisms, and making sure that there's human oversight of these systems.
So it's not enough to just rely on external regulations. Companies need to take responsibility for this themselves.
Absolutely. It's about building a culture of responsibility within the organization and making sure that those AI systems are aligned with the company's values and objectives.
This report really paints this picture of a future where AI is just woven into the fabric of the financial system,
It does.
and it has the potential to make things more efficient, more accessible, more personalized. But it's clear that there are some serious risks that we need to figure out how to manage.
That's exactly right. It's a future full of promise and, potential pitfalls. And the choices that we make today, those are going to determine which path we end up on. This report is really a call to action for everyone, governments, businesses, individuals, all of us. We need to have these thoughtful, informed conversations about how we want to shape this future.
It's definitely a lot to process, but I feel like we've covered some really important ground today. At least I have a much better understanding of the key issues now.
I'm glad to hear that.
Before we wrap up, is there any final thought or, key takeaway that you'd like to leave our listeners with?
I think the biggest takeaway is that this story is still being written. The future of AI in finance is not set in stone.
Yeah.
We all have a role to play in shaping that future. So stay informed, stay engaged, and don't be afraid to ask questions. The more we all understand about AI, the better equipped we'll be to make sure it's a force for good.
That's a great point. We've covered a lot in this deep dive, but it's really just the beginning of the conversation. Keep learning, keep asking questions, and we'll see you next time for another